Hi, my name is Amaika Abdurrahim, matrix number DF220119. Welcome to our presentation on Civionics Consultants, a civil and structural engineering consultancy located in the heart of Georgetown, Pulau Pinang. Established on 13 January 2015, the firm has been providing professional engineering services with a focus on innovation and quality. Our services are comprehensive, covering core areas like designing reinforced concrete and steel structures, infrastructure planning, and essential systems like drainage, sewerage, and water supply layouts. Beyond technical design, we provide site supervision, handle authority submissions, conduct feasibility studies, and offer value engineering proposals to enhance project outcomes. At Civionics, our commitment lies in delivering efficient, safe, and long-lasting solutions. We tailor our services to align with each project's unique requirement while ensuring compliance with regulations and practical construction standards. Over the years, we have collaborated with a wide array of clients, including private developers, government bodies, and institutions. Our portfolio spans residential and commercial buildings, as well as public infrastructure projects, reflecting our versatility and dedication. Okay, this is our organization chart for our company. IR Muhammad Amirul Naim as our director, IR Muhammad Afiq bin Abdul Halim as our technical engineer, and IR Muhammad Zuhailmi bin Gamis as our structure engineer 1, and IR Ahmad Eka bin Ibrahim as our structure engineer 2, and lastly, IR Ahmad Mshairi bin Maropi as our structure engineer 3.
Okay, for part two for balance sheet, which debt and solvency position, okay, total debt stand at around 9 million, which mean 7 million in a long term and 1.2 million for the short term for borrowing. So the compare the total equity about 11.4 million. The debt to equity ratio is about 18%. So this is quite high, showing reliance on borrowing possibly for big project. While manageable, the company, which means Gamuda, need to be more careful with that and interest payment for if they want to moving more forward in the future. Okay, for part three, positive equity growth. The company, which is Gamuda, equity increased from RM 10.9 million in 2023 to RM 11.5 million in 2024. This growth comes from profit keep in the business and the new share issue. A growing equity base means stronger financial stability and better confidence for investor. And for conclusion, summary, in summary, Gamuda has strong liquidity and growing equity, which are a good sign for this company. However, the company has high level of debts. So to stay financially healthy, it is important to manage borrowing costs well and keep expense under the control.
Hi, my name is Muhammad Amirul Naim bin Hakimi, and I will continue the presentation of financial performance analysis of Gamuda Berhad for the cash flow. For the financial year ended in 31st July 2024, the company reported a significant decline in operating cash flow. Profit before tax dropped sharply to RM 248.2 million from RM 2.06 billion in the previous year. The operating profit before working capital change stood at RM 116.3 million, a notable decrease from RM 252.5 million in 2023. Negative working capital movements, particularly RM 594.2 million outflow related to trade balance with subsidies, and RM 349.7 million decrease in contract liabilities. Investing activities also resulted in a net cash outflow of RM 358.8 million, though this was an improvement from RM 1.37 billion used in 2023. Major cash outflows included RM 128.3 million for the purchase of property, plant and equipment, which is RM 144 million for capital injections into subsidies, and RM 951.2 million in a net advance to subsidies. In contrast, financing activities contribute positively to cash position, generating RM 1.07 billion in net inflows, up from RM 596 million in the previous year. This was primarily due to a substantial RM 1.28 billion in new borrowings and RM 146.3 million from the exercise of ESOS. Outflows from financing activities included RM 272.6 million in finance costs and RM 74.1 million in dividends paid to shareholders.
Okay, next I will explain about income statement. In 2024, Gamuda recorded a strong revenue of 13.35 billion, which is 62% increase from the last year. This growth was mainly due to successful expansion in Australia and Vietnam, and they have better project execution. Operating profit also increased slightly to RM 945.9 million, but the operating margin also dropped from 11% to 7.1% because of construction cost double. So while the company earned more, the expense also grew faster. Profit before tax increased slightly to 1.1 ringgit billion, but net profit was lower than 2023. That's because of last year had a one-time gain from selling highway asset worth around 1.1 billion. For the income statement also, I will explain more. Okay, for the net profit, Gamuda net profit from core business was RM 943 million, still strong without any one-off gain. Earning per share dropped from 99.93% to 33.3 cents, sorry, which reflect more realistic and ongoing profit. One concern is that finance costs more than double, from RM 78.4 million to 173.4 million. This happened because the company borrow more to fund it in growing project. Okay, for the tax rate, stayed stable at around 14%, which is reasonable. So to sum up for all the income statement, Gamuda show strong revenue growth and solid operation. But to moving forward, the company, which is Gamuda, need to focus on controlling costs and managing debts to keep profit healthy. Thank you.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Zain bin Gamis. So now I will present about analysis on benefits cost ratio. So this is our table, which is life cycle cost acquisition, life cycle cost operation, and life cycle cost benefits. For the total of acquisition is for site A is 40 million and 630,000, and for site B is 90 million 112,000. For life cycle cost for site A is 545,000 and for site B is 598,000. For life cycle cost benefit, site A is 60 million 236,000. For site B is 60 million 236,000. Okay, so now I will present the benefit cost ratio for site A. For conventional method PW, after calculation we got 4.04, and for modified method we for PW is 4.52. For conventional method AW is 4.04 and modified method AW is 4.52.
Hi, Assalamualaikum. My name is Muhammad Afiq Daniel bin Abdul Halim. So I will explain about analysis on benefit cost ratio for site B. So as you can see here, we use two method, which is conventional method and modified method. So first, for conventional method, for present worth,
we get 3.16. Then conventional method for annual worth, we get 3.16, which is both greater than 1, so the project is accepted. Then the second one is modified method for present worth is 3.45, and modified method for annual worth is 3.45. So the project is accepted. For discussion, this study is about the Community College Development Project in Johor, which aim to promote inclusive education and regional development. We assess two sites, which is Site A and Site B, using both conventional and modified benefit cost ratio methods. As you can see in the table, Site A shows a higher BCR of 4.52 compared to Site B, which is 3.45, indicating better economic returns. We also evaluate the financial strength of Sivionic Consultant. The company has strong liquidity, growing equity, and steady cash inflows. Revenues and earnings per share are increasing, showing positive financial performance. Thank you.